Good evening, traders. This is Daud from Elliott Wave Forecast.com. Welcome to another video blog in which we're going to take a look at a double three Elliott Wave structure, which we believe is unfolding in the market. And there is a misconception that every double three structure, many people would just call it a double zigzag. However, for a structure to qualify as a double zigzag structure, the first leg and the third leg within the W, and then the first leg and third leg within the Y. They need to be in five waves, just like you can see in this chart over here. You got five waves coming down from the peak: one, two, three, four, five. Three waves in B, then you have one, two, three, four, five. So this makes a zigzag. Then you have a connector in wave X, and then you have one, two, three, four, five. Three, one, two, three, four, five. So you got a five, three, five here, a zigzag, a connector, and then another 535, another zigzag. So this one qualifies to be a double zigzag, but this W, instead of being an ABC, it can be 3 3 3 as well. So it can be, the internals here can be corrective and can be WXY. This can be the same, which is why not every WXY structure is a double zigzag structure. That many just commonly refer to a WXY structure as a double zigzag structure, which is wrong. Some obviously WXY structures can be double zigzags, just like this chart is showing, but not everyone is, and that's why we call them double three structure, unless you can actually see a subdivision of 535 in W and then 535 in the Y as well. Okay, so we actually see one unfolding in the market as of now. It's on a weekly time frame or the daily time frame, so it can take some time to materialize, but it can provide a good trading setup. So let's get down to it and take a look at what structure it is that we would be looking at today. So here we have the weekly chart of sugar futures down from this 2011 peak. We can see that the sugar did swing down that we're labeling as A. Then we had a bounce in the B, and then we got one, two, three, four, five. So this, you can call this a zigzag. All right. You got ABC down here. Then you got a three-wave bounce connector. Then you had one, two, three, four, five swings down again with the divergence in RSI, as you guys can see, and we broke below this low of 2015. With this break of 2015 low, this becomes an incomplete sequence because you have, A, B, C, W, three-wave bounce in the X, and then a new low, which means that with the break of this low, you now have one, two, three, four, and five swings down, which makes it an incomplete sequence. And we should now be at, so which means that we just finished this wave A here with the break below this W, and we are currently bouncing within this wave B. And when the wave B finishes, we will expect another C leg lower to unfold in five waves. It should at least match this leg in magnitude, unless it truncates, in which case it can stop at the 0.618, 0.764 extension area of the red AB cycles. Okay, so this is where we are right now, bouncing within this B wave, which obviously is it's a three-wave structure, can be any corrective structure. Okay, so this obviously break here, means that we have a bearish sequence as we are indicating here. So this should be a selling opportunity. So we have already seen three swings up, one, two, three, which means the B wave can be complete here. But looking across the market, and then obviously looking at the time factor, this looks to be a bit too short in time as compared to the time taken here from 2016. Okay, September peak to August 2018. So it roughly took about 2 years here. And then this one obviously is a bit too short in time. Okay, so we believe that we can spend some more time here. All right, we have not even reached the 23.6% retracement in time, which we're getting close to. Okay, and then obviously the 50% retracement in time is obviously even further down. It could take us towards August 2019, and this one here comes in February 2019 itself. All right, so we'll have to see, I mean, where exactly it ends as far as the time retracement is concerned, but it is a bit too short in time as of right now. So due to which it can still do seven swings up. Okay, so currently we only got three swings up, and if you do end up doing seven swings within this B wave, then we would be looking at this area that we have highlighted with the blue box. And the blue boxes on our charts are basically high frequency areas, and they act as high frequency areas, and then you got like an very high chance or very high probability, about 80-85%, that you would get at least a three-wave reaction reaction from that blue box. Of course, sometimes you wouldn't. The market can, pierce through the top or the bottom of the blue box, and it can turn into a five-wave move. But about you have a very high chance of getting a reaction from the blue box, and when it is combined with the right side tag and the bearish and the bullish sequence, and obviously it becomes a very powerful trading area. So in this case, we know the sequence is favoring more downside, as you guys can see here. Obviously this area is reached. That area should see sellers, and from there we can start to see leg lower or produce a three-wave pullback at least to correct the cycle from this black wave X low, which will allow any sellers in that blue box to get into a risk-free position. And after that, obviously it can either do pullback and do WXYXZ, or it can become, the W can go here. This can be X and it can do a larger WXY structure. But that area, if we should see sellers for a three-wave reaction lower at least. Obviously, it does not have to break higher, so it can go here and drop, in which case, obviously, if this low breaks, your B wave should already be in place here, and it should already be in this next C leg lower. Okay, and that can, we could be looking for a move to equal legs of red AB. Obviously, as it can take us pretty close to zero, so it might truncate in the 0.618, 0.764 extension area. But obviously, these targets we can look at once we know for sure the B wave has completed. Okay, so surely we believe that area will see sellers, and then should produce a three-wave pullback at least, and ideally produce the 7 swing lower to complete a double zigzag structure from the 2011 peak over here. All right. So that's the video. I hope you guys enjoyed it, and you understood the difference between a double three structure and a double zigzag structure as well, and which one is unfolding in this video. So stay tuned. Take care of yourself. Have a good night, and keep visiting our homepage for more free videos, charts, and blogs. Thank you all.